So come to the next session. So in the previous session, we have almost completed emphasis of matter paragraph. That is nothing but SA 706 standards. We have come 706 standard we have completed. What 706 deals with? Emphasis of matter para and other matter paragraph in the independent auditor's report, and we have seen how in reality it works, how other emphasis of matter paragraph is used, how other matter paragraph is used in reality. We have seen audit reports of Air India, or we have seen audit report of ILFS audit report we have seen, and we have even seen audit report of State Bank of India with respect to other matter para. Yes or no? Yes. Now let's discuss the other two paragraphs. One is a material uncertainty related to going concern. You see this. Now, material uncertainty related to going concern. First, we will discuss this. Then we will go to the key audit matter. Look, whenever we are discussing one section of the audit report, indirectly we are covering one standard. Suppose opinion para, if you look at, and basis for opinion para, these two sections of audit reports, they were actually discussed in two different standards, that is 700 and 705. Whereas emphasis of matter paragraph and these two are covered under SA 706. Likewise, now we are going to discuss about which para at first. Material uncertainty related to going concern. This section of the audit report now we are discussing. So with this, which standard that we are going to complete? SA 570. In January 21 exam, in January 2021, what is January exam, sir? In November 2020 attempt, we have two cycle exams. One is cycle 1, which is conducted in November month. Cycle 2, which is conducted in January month. In that attempt, in that exam, there is a straight question which is asked on this, which is very advanced question. That's why I always tell students that auditing is not very so simple like, which is discussed in revision classes. It has a lot more in depth. Okay, anyhow, let's look at that standard. So everyone please come to SA 570. So SA 570, the standard heading is very simple, going concern. So first of all, sir, what do you mean by going concern? Here, this is one standard I can confidently tell that many students don't understand. They don't understand this standard. First of all, they don't understand any logic behind why this standard has been first of all brought. Okay, SA 700 is there, contents of audit report. Auditor has to prepare audit report and he has to give audit report. So there must be a structure. So there is a standard. That logic is very simple. But why for going concern there is a standard? And first of all, understand, we all know going concern is one of the fundamental accounting assumption. Correct? You have seen in accounting that going concern is one of the fundamental accounting assumption that you understood right from your foundation as well. What are fundamental assumptions? Accrual, going concern, consistency. Yes or no? And there are many other accounting principles like substance over form, like matching concept, so many, periodicity, so many other. Now, going concern is not an assumption for the management, understand. This is an assumption using which we need to interpret the financial statements. Going concern assumption means in which context? Assumption in which context? Is it in the context of preparation of books of accounts and preparation of financial statements, or is it in the context of business, or is it in the context of or interpretation of financial statements by shareholders? In which context this going concern assumption is to be taken? First of all, who takes this assumption? The assumption is taken by, before I go into that, let's discuss one small example. Suppose you look at example, this is a Reliance Limited balance sheet, Reliance Industries Limited balance sheet. This is example. Now you look at here, plant and machinery, 3 lakh crore value is there. In Reliance company, plant and machinery, it is somewhere around, actually it is around 5 lakh crore. But let's take for the sake of example 3 lakh crore plant and machinery. This is the net written down value of the plant and machinery. How this is arrived? 5 lakh crore gross block value minus 2 lakh crore accumulated depreciation, and that's how the value came to 3 lakh crore. Now, next, some current assets altogether some 2 lakh crore, outside liabilities some 3 lakh crore, equity and reserve some 2 lakh crore. Total 5 lakh crore, and 5 lakh crore is the balance sheet of the company. Instead of Reliance, no, let me use the word Ford. Ford. You know Ford, right? Ford Motors. It's a car manufacturing company. It sells cars across the world. Very, very big company. Ford is a very big company across the world. And you know, coming to in the Indian context, Ford has entered in Indian market somewhere around 2.5 decades back or 2 decades back. Somewhere in 1995 or 2000, they entered into the Indian market. And you know, in 2021, Ford Motors closed in India. They exit from Indian market. You know, Ford Motor balance sheet, suppose you take Ford India balance sheet, it has a plant and machinery worth of 3 lakh crore. What do you mean by this plant and machinery? Ford balance sheet, Ford company balance sheet contains a plant and machinery value of 3 lakh crore. What do you mean by this plant and machinery? This is nothing but the entire car manufacturing factory. You just search in YouTube any videos right now, how car manufacturing plant, you know, how it looks like Tata Motors, their facility, their manufacturing facility video is there. Ford Motors facility videos are there. Mahindra facility video is there. Tesla is their video. In YouTube, so many videos are there regarding various car manufacturing units. You see the structure. Today, example, you take Maruti Suzuki. It is manufacturing a car within 5 minutes. Not even 5 minutes, I think 1 minute. I think for every minute they're manufacturing one car. The entire car manufacturing process actually takes 10 to 15 minutes today because of the, you know, infrastructure, machinery, automation process, everything. Now, in order to manufacture a very big car within minutes of time, think about the investment in plant and machinery. Correct? Huh? So that value is very huge. And you know what? Ford Motor cannot sell high number of cars. In one of the particular month, the company has sold only one car, single car only sold. And that was the last month, that was the month in which the Ford decided, okay, India is no more a good market for us because our cars are not accepted by Indians. And so they decided to exit and they announced the exit. And you know what? The Ford company has a very big plant, nothing but factory at Chennai. They have a very big factory at Chennai. What about the status of the factory then? Forget about employees, forget about loans, forget about all that. The factory is there, no. Plant and machineries. So much of machinery is there. There they manufacture the cars. Now tell me, do that plant and machinery, now earlier before they close this business, their balance sheet somewhere shows some 1.5 lakh crore plant and machinery. Now they stopped the business. They closed the business. Now tell me honestly, do you think the entire plant and machinery which is there in the factory, as per the balance sheet, it is 2 lakh, 3 lakh crore, example. If I sell the plant and machinery as it is, do we get the same amount? Do we get the same amount? Obviously not. Not at all. Yes or no? Because see, car manufacturing, suppose if I have an air conditioner at home, this air conditioner, in my books of accounts, suppose in my office, if I have an air conditioner, in my books of accounts, I showed a written down value of 35,000 rupees. If I go and sell to somebody else, they may be ready to pay 30,000. Why? Because air conditioner is something called a common asset. Everyone uses it. So even if not me, if I want to sell this, there is a buyer in the market so that he will use it. Where is the buyer for car manufacturing factory? Can you buy? Even if I give it to you for 10 crore, 1.5 2 lakh crore worth of plant and machinery, I am giving it to you for 10-15 crore. Can you use it? You can't. Because by using that factory, by using that entire plant and machinery, what you can produce is only cars. That too, which cars? Ford Motor related cars only they can manufacture. Can they manufacture some other cars? Because for every car, the chassis, the engine, the platforms are very different. So obviously, the Ford factory is not being useful for even other car manufacturers. Only some equipment will be useful. Majority of the equipment of Ford Motors is not useful for Tata, not useful for Maruti, not useful for Hyundai. So now who is there? Where is the buyer for this? Exactly. Which means if a company cannot continue, now tell me here in this case of Ford factory example which I gave, where there is no buyer, what is the only method through which I can sell these entire factory? By dismantling it. And only in a piecemeal method I can sell this entire factory. Nothing but I need to dismantle entire plant and machinery. Iron, steel and other items I need to sell on kg basis, ton basis. There is no value for the mission at all. There is no value for the structure at all. It is just a metal. Whatever market price is there for buying a metal in the market, at the same price we will buy this. That's it. So 3 lakh crore worth of factory, if you sell it on a bulk basis like this, if you sell it on a scrap basis like this, nothing but it's called a scrap. You can only sell them as a scrap. You hardly fetch 30 crore rupee. You hardly fetch how much? 30 crore rupees. But what is the balance sheet value? For that plant and machinery, 1.5 lakh crore, 2 lakh crore. Now immediately you should get this doubt. Every company you take, suppose you take Reliance Industries, they have a refinery, correct? Oil refinery. The oil refinery plant and machinery cost is somewhere around 5 lakh crore in the market. Sorry, as per books of accounts, it is 5 lakh crore. But do you think, if at all we sell that machinery outrightly today, at this moment, if at all we put an auction for selling that machinery individually, will it fetch 5 lakh crore? Definitely not. How much it will fetch? We can only sell it on a piecemeal basis because no buyer is there. The point is no buyer because factories are customized. The machineries are customized. Those machines are useful to produce only that particular product for which it is designed for. So the net realizable values for most of the fixed assets is 5% of its cost. I'm talking about net realizable value. For most of the fixed assets, the net realizable value is generally 5 to 10% of the original cost. But in the balance sheet of any company you take, they are showing it at historical cost only. They are not showing fixed assets at NRV at all. If at all the company sell this, you take Indigo Airlines, they have flights, right? They have flights. So many flights they have. That they're having some, around 500 fleet of flights. The books of accounts shows 50,000 crore, the flights fixed assets cost. But if you sell the flights in open market, nobody will buy. Each flight they'll hardly buy for 5 to 10 crores, not more than that. But the company has purchased them by paying 100 crore per flight. Kingfisher airline flights were still in the stockyard. Jet Airways flights are still in the stockyard, bank godowns. No buyer is there. Who will buy? Exactly. So fixed assets, if you look at what the number, the figure, the amount that we see in the balance sheet is completely different from the NRV that they will bring. If at all we sell it immediately, or even if you take time and sell, whatever you show in the books of accounts, balance sheet, the value, that amount you will not get at all. You hardly get 10%. Now you may get it out. So then why companies are showing at that value? We are also preparing books of accounts using that cost method. We are also showing in the balance sheet fixed asset at original cost minus depreciation, but not at NRV. It is a cheating to the shareholder. No. Why I don't consider NRV? Why we don't consider NRV in case of non-current assets is because we don't have intention to sell. Because we don't have intention to sell. If you don't have intention to sell, why do I bother about its NRV? Suppose if someone asks me, what is the value of this phone? Someone asks me, what is the value of this phone? I tell them the price at which I purchased this phone. If someone asks me, even even after using 1 year, 1.5 years, if someone comes and asks me, what is the price of this phone or what is the value of this phone? I just tell them, I purchased around 1.5 years ago. It doesn't matter. I just tell them the price at which I bought. The cost I paid, I will tell them. But suppose if I have an intention to sell this phone and if I go to a mobile shop, if at all they're asking me what is the price, I will tell them the expected selling price. Correct? Huh? If I want to sell this, at the time when they're asking me about the value of the phone, I will tell them expected selling price, expected realizable value, expected net realizable value. But if I don't have intention to sell, if someone comes to me voluntarily and asking me what is the price of this phone, I will tell them at the original cost, the price originally which I paid. The logic is exactly same. Fixed assets, company don't want to sell. When I don't want to sell, why do I bother about its realizable value? I will use them. I will produce goods. I will do the business. I generate cash flow. So by using these fixed assets, by generating cash flows, more than net realizable value, I will get much more value addition to my business by using these fixed assets. Because I don't have intention to sell, I will use them. I will produce profits for long run. So why do I bother about NRV? And hence, we show the fixed assets at historical cost. This is the logic. Why fixed assets are shown at historical cost? The logic is because the company do not have intention to sell. That's why you see inventory. Why we value inventory at cost or NRV, whichever is lower? What is the reason behind this? Because we want to sell it immediately. What do you mean by inventory current asset? We want to sell them. Now we have a concept called prudence. What it says? Recognize expected loss now. Postpone expected income. Means when you expect some income tomorrow, don't recognize now. But when you think there is a loss, possibility of loss tomorrow, recognize it now. If I have inventory worth of 10 crore, but I can only sell it at 8 crore, there is an expected loss of 2 crore. Recognize now in the books of accounts. That's why we are valuing the inventory at cost or NRV, whichever is lower. By recognizing inventory at a lower value, we are indirectly recognizing the expected loss. Whereas with respect to fixed assets, we don't follow that principle because we don't have intention to sell. Now tell me, if you go and ask Mukesh Ambani or anybody else, Indigo Airlines, say your airlines, if at all you want to sell this right now, nobody will buy. NRV per flight is 1 crore to 5 crore. But you are showing per flight 50 crore cost in your books of accounts balance sheet. You are doing wrong. If you go and tell them, what they will tell? Who the hell are selling these flights? I'm not selling this flight. I'm using this. I'm doing business. And I will be in this business for another 10 years. For another 15 years. We are running a sustainable business model. This is what the businessman talks. You don't bother about the selling price. You don't bother about the realizable value. Now my question. Okay, dear businessman, you are using the cost method to show fixed assets in the balance sheet because you don't want to sell. Correct? Yes. Because I don't want to sell my asset, I am following cost principle, historical cost method for recognizing or presenting or disclosing in the balance sheet about my fixed assets. So you are following going concern assumption. What do you mean by going concern assumption here? Because I don't want to sell my fixed assets means, what do you mean by that? Going concern means what? Concern means organization. Concern means organization, entity, enterprise, establishment, concern. Going concern means what? My organization will keep on going. I'm not going to stop my organization. I'm not stopping my organization. So that's called going concern assumption. So as a businessman, because I don't have intention to sell the business, I am using going concern assumption for preparation of balance sheet, preparation of books, everything. Now the question, because balance sheet and P&L or books of accounts or financials are prepared on going concern basis, what is your duty, Mr. Auditor? Tell me. Your duty is to check whether these financial statements, the basis for preparation of the financial statements, you need to check. No. What is the basis for the preparation of financials? Going concern. Because going concern is because going concern assumption is used, they are showing fixed assets, everything at historical cost, all that. Correct? Huh? So because now you need to check what? You need to check as a whole financial statements and give opinion whether they are true and fair. Suppose no, Jet Airlines, they closed the business. Still they are preparing financial statements using going concern basis and misleading people. We are continuing. Actually, not even a single flight is operating right now. Not even a single car is sold by the Ford in the past few months. Now, still, Ford Motor is coming and showing you balance sheet, historical cost basis, going concern assumption. You're not doing business. How can you prepare financial statements using going concern assumption when you're not doing business at all? When your business already stopped, how can you use going concern assumption? You cannot use going concern assumption. So as an auditor, I need to check every organization wherever I'm doing audit, they prepared financial statements using going concern assumption. I need to check what? Can they use this assumption? Can they use this assumption or not? This is what I need to check. This entire standard is dealing about auditor has to check whether usage of going concern assumption by management for preparation and presentation of financial statements. The auditor has to check what? Usage of going concern assumption by management for preparation and presentation of financial statements. Is this appropriate? Is this appropriate? Whether usage of going concern assumption for preparation of financial statements is appropriate. Auditor has to check that. Suppose I was appointed as an auditor for Ford Motors India Limited for 21-22 financial year. I am the auditor. And as on 31st March 2022, Ford Motors balance sheet is prepared, P&L is prepared using going concern assumption. They are prepared already. And I am the auditor. I will look at the balance sheet. I found historical cost method, everything is used, notes, everything they're showing as if business is continued. I immediately go to the top management. Hey, dear top management, from the past 6 months, you are not selling the cars. You stop the business. You announced it publicly. How can you prepare financial statements using going concern? Because no, your financial statements, you are showing, you are clearly mentioning we prepared financials on going concern basis. What do you mean by that? You are continuing the business. That's what you are indicating. But what you told exactly? You told very clearly you exit from the business. How can you show like this? I will question them. In this case, Ford appointed me, right? As on 31st March, I checked. Company is no more doing business. Now tell me, when the company no more doing business, when the company cannot do the business anymore, there is no possibility for the company. No funds they have, no resources they have, sales are no more, market is no more for this company. When all these are negative, still company prepared financials using going concern basing and trying to mislead you. What you will do? Sir, very simple, sir. I'm the auditor for that financial statements, right? I will say don't believe the financial statements to public. I will give adverse opinion. Exactly. This is what the standard talks about. This entire 570 standards talks about this. So what auditor has to check? Auditor has to check going concern assumption. Going concern assumption which is used by management for preparation and presentation of financial statements. Auditor has to check this assumption used by management for preparation of financials. Now tell me, dear Mr. Auditor, is it appropriate? You check it? No. Auditor has to check this assumption, whether company can use it or not. I saw Indigo Airlines, I saw Maruti Suzuki financials. Every month company selling 1.5 lakh cars. Fast moving, so much customer waiting period, excellent profits, everything is fine. And the Maruti Suzuki is also using going concern assumption. They used going concern assumption for preparation of financials as on 31st March 2022. And business is also superb. No indication, no risk at all. Everything is fine. So after I check Maruti Suzuki position, now what I felt? Going concern is appropriate for Maruti Suzuki. And they also prepared using going concern assumption. Financial statements are prepared using going concern assumption by the management. When I checked it, Everything is appropriate. Which opinion I'll give? Unmodified opinion. In this context I'll give. In this context I'll give which opinion? In the context of going concern I'll give which opinion? Unmodified opinion. Suppose Ford Motor I am appointed as an auditor. Ford Motor I am appointed as an auditor. They also prepared balance sheet P&L using going concern basis. They also prepared. But 6 months before the balance sheet date, they announced it publicly that we are no more continuing business. How can you prepare balance sheet P&L on going concern when you are not at all doing the business? Now, management prepared financials using going concern basis. But when I checked it, is it possible for the management to continue without doing the business? No. Without doing business, can you use going concern assumption? No. But financials are prepared using going concern assumption. Management used going concern assumption for preparation and presentation of financial statements. In case of Ford Motor, is it appropriate? No. For Ford Motor, using going concern assumption is inappropriate. I felt it is inappropriate. They should not use it. They should not use it. When going concern assumption is missing, all the balance sheet P&L items must be shown at realizable values, NRVs. No historical cost. But Ford is valuing fixed asset on historical cost. Can they use going concern assumption? No, but they used. They used going concern assumption. Is it appropriate? Inappropriate, sir. When the financial statements are prepared inappropriately, completely misleading, which opinion you'll give? Straight away I'll give adverse opinion, sir. And the reason I will clearly mention in basis for adverse opinion section. I will straight away give adverse opinion, but the reason I will mention in basis for adverse opinion section of the auditor's report. Now suppose there is another situation. Let's take the situation of Air India. Let's take a situation of Air India. Everyone knows that very recently Tata has acquired Air India. Tata Group has acquired Air India. Now you know what Air India is having approximately accumulated losses of 1,50,000 crore. They are having accumulated losses of lakhs of crores. Company is already in a defaulting position. You know that? Air India position is so poor. But you know, not even a single supplier was defaulted. Every loan taken by Air India was repaid on time. Every installment is repaid on time. Every supplier of fuel, supplier of raw material, supplier of flights, like fixed assets, they were paid on time. You know why? You know what? Company Air India cash balance is negative actually. Sir, having negative cash balance, how did they repay, sir? Air India is getting every year from Government of India crores of money. The Government of India is giving crores of money in the form of capital to Air India, so that even though Air India is having losses, they are continuing, so that they can continue. They don't default. They don't become insolvent. The government is supporting every year. But tell me, how long government will support an establishment? Air India is a public sector undertaking. Air India earlier is a public sector undertaking. How long, public sector undertaking, which is a loss making, will be supported by Government of India? Now, if you look at the position as on 21-22 financially, if you look at the position, you say that Air India position is excellent. Air India position is fine, not excellent. It's fine. Though it is having losses, though it is having so many issues, still company is running properly, company is running successfully because of Government India support. My problem is, now it is appropriate. Going concern now is appropriate. Management is using going concern assumption. I went to Air India management and asked, hey management, you're having so many losses. Cash is not at all there from your business. From your business, you're not at all getting enough cash. Your expenses are 1 lakh crore. You are getting 50,000 crore turnover. So there is every year huge losses there. How can you run the business? You cannot use going concern assumption, I told. Management immediately replied, sir, I know we are actually in the deficit. Total our net asset value is negative. Our operating cash flows are negative. Everything is negative. But you know what? We will still continue without any problem because the government of India is supporting us. Now my question is, okay, that's why you prepared going concern. That's why you prepared financials using going concern basis. Correct? Huh? I asked to Air India. Oh, that's why you prepared financials using going concern basis. Yes. Air India management told, yes, because government is supporting us, we are preparing financials on going concern basis because we will not default. Now here my question is, how long government of India will support? How long? Next year government may come up with a decision that, okay, let us not continue business in airlines. So many losses every year, government cannot bear these losses. Possibility there, huh? So going concern assumption for Air India right now, they are saying everything is fine because government support is there, but material uncertainty there, yes or no? In this case, though Air India says, though we are having negatives, cash flows, negative things, everything, what Air India is saying, material uncertainty. Though Air India says their going concern is appropriate, I know very well when the government may withdraw the support, nobody can predict. So there is a material uncertainty related to going concern there, yes or no? So Air India position is what? Now everything is fine as long as government is supporting every year. Everything is appropriate. But material uncertainty relating to going concern is there. But a material uncertainty related to going concern is there. Now tell me, if this is the kind of situation, you see Maruti Suzuki, no material uncertainty. Excellent. You see Ford, it's inappropriate. Straight away over. The matter closed. But what about Air India? It is neither appropriate nor inappropriate. It is okay, but uncertainty is there. Now, what about this situation? The standard says, okay, auditor, Air India is facing this situation now. Okay, fine. Yes, sir, Air India is facing this situation. Did they explain? The institute, the standard is asking you, the auditor, did Air India explained this situation? Did Air India explained this situation in financial statements adequately? In financial statements, did Air India explained adequately? Air India in the notes to accounts or in the balance sheet P&L, somewhere they should mention this situation to shareholder. They cannot straight away say going concern and then prepare financials. Tomorrow in the next year, if government withdraw the support, company will collapse. Employees will collapse. So company is on a very risky zone, definitely. So the company should explain this risky situation to every shareholder. Now the question is, did Air India explain everything to the shareholders? The answer is yes. Yes, Air India explained. If you look at Air India notes to accounts, in one of the note point, they clearly mentioned, dear shareholders, we are having losses. Our net worth is this much negative. We actually will default. But government of India is supporting, so we are sustaining. Because of government of India support, we are preparing the financial statements on going concern basis. They mentioned clearly. They mentioned this entire situation honestly in the balance sheet. They honestly admitted that we are in losses, but we don't close the business. We will not close the business because government of India is supporting. They clearly explained the problem to all the shareholders. Now tell me, if Air India honestly discloses everything, if Air India honestly discloses everything in the balance sheet P&L, if the answer is yes, which opinion you will give? Which opinion you will give? Sir, I'm an auditor. I saw the situation. I talked to the management. They told me very clearly the entire information situation. I understood. And they even clearly mentioned everything in the balance sheet P&L. What is there to talk? I'll give unmodified opinion. I'll give unqualified opinion. I'll straight away give which opinion? Unqualified opinion I'll give. That's it. What you can do. Because everything is shown. If Air India did not show, if the financial statements of Air India do not explain The material uncertainty that they are facing. Right now, government is supporting. Tomorrow, government may not support. If this situation, Air India do not explain in the financials, then Air India management is misleading the people. But it is not the case. Air India honestly showed everything. So I'm giving unqualified. My question now is, what if Air India do not show? What if Air India do not show the financials? Air India financial statements do not. What if Air India financial statements do not present this particular fact? Sorry, sir. I'll straight away give adverse opinion. If it is not so severe, I will give qualified opinion. Because the financials are misleading. The material uncertainties, company is facing a risk. The company is facing a business continuity risk, going concern risk. If that risky situation, company don't explain the financial statements, financials are misleading. When the financials are misleading, I will not say they are true and fair. I will qualify them. If it is very severe, I will give adverse opinion. And the reasons I will mention in basis for qualified opinion or basis for adverse opinion section. Whatever reason is there, I'll mention in basis for qualified opinion, basis for adverse opinion section of the audit report. Still, there is a little extension, sir. You started the standard with one heading in the audit report. With one heading in the audit report, material uncertainty related to going concern. Just a minute. Material uncertainty related to going concern. This is a heading with which we have started. In the audit report, there is a side heading called material uncertainty related to going concern. Now in audit report, when this para will come, sir? When this para will come in audit report, material uncertainty related to going concern. When this paragraph will come in audit report, material uncertainty related to going concern. Now, let's look at this analysis. Now, look at this situation, which I highlighted in blue color. Air India is actually having losses, completely risk. And because government is supporting every year, they're able to survive. Because they're able to survive by government support, they have not defaulted anybody. Because they have not defaulted anybody, they are preparing financials using going concern assumption. And that information where they are facing severe threat, honestly they disclosed in the financial statements, notes to accounts. Because everything is clearly disclosed in the notes to accounts about the company, financial position, situation, support from government, everything. I am saying financial statements are true and fair. They are not misleading. They are honestly disclosing everything. But no, there is an important point in the financial statements. There is an important point in the notes to accounts. What is that point? Company is facing a material uncertainty. Company is facing material uncertainty. Tomorrow government may withdraw the support. So company is facing a material uncertainty related to going concern. Now it is fine. But tomorrow what if government stops? What if the government withdraw? So there is a material uncertainty. Financial statement contains such an important point. What should I do? Sir, we have seen in the previous class. Highlight it under emphasis of matter para. No. This is not an ordinary matter to highlight. In emphasis of matter para, I'll definitely highlight in emphasis of matter para. But this is not an ordinary matter. Just like how I highlight contingent liability, how I highlight important provisions, how I highlight some important note point. This I can highlight in emphasis of matter para. Absolutely fine. I can highlight it. But SA 570 urges, SA 570 requests you to use a dedicated para, a dedicated section in audit report. What section in audit report? Material uncertainty related to going concern. Material uncertainty related to going concern. There is a dedicated para in audit report. Material uncertainty related to going concern. Under that para, under that section, please refer to note number so and so, which talks about material uncertainty. Please, Mr. Auditor, don't highlight that under emphasis of matter. Highlight it under dedicated para. If you highlight under emphasis, no, you'll be highlighting some 4 or 5 more points. People think this is not so special. But going concern matter is something special, right? Very important for shareholder. So highlight it under a dedicated para. You look at Air India audit report. They have given qualified opinion because some issues are there in trade receivables and all. Some issues are there. There they have given qualified opinion, but going concern, they gave unqualified. See, opinions given by auditor is as a whole. As a whole will give opinion. Remember, as a whole on the financials. If you think company, suppose you see Ford Motor, if they prepared financials using going concern, which is not correct, I'll straight away give adverse opinion, not only on going concern, on the entire financials, I'll give adverse opinion. Here you see, the auditor give qualified opinion, that is some with reference to some trade receivables, trade payables, some fixed assets, leased assets related to that only qualified opinion, not related to going concern. So here auditor gave qualified opinion on the financials as a whole. Here auditor gave qualification on which matter? Here auditor gave qualification not on the going concern matter, understand? The auditor gave qualification on some trade receivables, some fixed assets, some leased assets. Regarding that he gave qualification. Regarding that he raised objection. Not related to going concern. Which means as a whole on the financial statements, going concern matter auditor did not qualify. Auditor did not qualify. Why Why the auditor has not qualified? You see, there is a separate section in the audit report. Material uncertainty related to going concern. What auditor have qualified? The company incurred 7,765 crore, 77,000 million or 7,700 crore, both are same. Okay. And the company current liabilities exceed current assets by 54,000 crore. And company accumulated losses are 70,000 crore. Complete net worth erosion means there is no net worth at all. In spite of these events, okay, the management is of the opinion that going concern is fine in view of support from Government of India. Because government is supporting, we have prepared financials on going concern. Refer to note number 53. Auditor is asking you to refer note number 53. Management told why. Management told very clearly why they prepared financials on going concern, even though their net worth is negative, even though the accumulated losses are high, even though operating cash flow is negative. Because government support is there, they prepared financials on going concern basis. That point they mentioned in the notes to accounts. You are just highlighting it here. Are you objecting anything here? Are you objecting anything? No, we are not objecting. We are just highlighting that point. So ongoing concern aspect, which opinion auditor gave ongoing concern aspect? Sir, auditor gave unqualified, sir, because qualified opinion is only on few issues, not on going concern issue. So in our example also, which opinion auditor gave with respect to going concern? Unqualified opinion. Now here, see, if auditor give unqualified opinion and leave, what people think? Hey, everything is fine with Air India. Management prepare financials, auditor also saying everything is true and fair. So everything is fine. People may think like this. So since you gave unqualified opinion, on going concern matter, but the financial statements, contains a discussion on material uncertainty, which is very important point. What you should do? You must highlight. Emphasis of matter para is not compulsory. You know that? Emphasis of matter para. Is it compulsory for the auditor to highlight some important point? Not compulsory. But when there is a material uncertainty related to going concern, suppose in Air India, note number 53 contains material uncertainty related to going concern. This auditor has to highlight, no. Compulsory it is compulsory for the auditor as per SA 570. So unqualified opinion, material uncertainty related to going concern. There, please draw attention of the user to note number 53, which talks about material uncertainty related to going concern. So material uncertainty paragraph is compulsory. Suppose auditor gave, now look at very carefully, this is very important point. Suppose Air India itself, let us take. Air India management, they did not inform, they did not present, they did not disclose in the notes to accounts about Government of India support. They did not disclose anything about material uncertainty, risk, business risk they are facing. They did not talk anything about that. Now tell me, You saw the situation reality. You know Air India is facing severe trouble. Government is supporting. That's why they are surviving. And this situation, Air India management did not discuss in the balance sheet, did not discuss in notes. Financials are misleading, correct? Financial statements are misleading. Which opinion you'll give? Which opinion you'll give in this case? Sir, depending upon the severity on the going concern material uncertainty issue, I will either give qualified opinion or adverse opinion. And why I gave qualified opinion, adverse opinion, I'll give reasons in basis for qualified opinion, basis for adverse opinion section of the audit report, sir. Air India is facing material uncertainty. They didn't disclose. For example, they didn't disclose in the financials at all. Financials are misleading. They are not showing you true and fair picture of the company, true and fair position of the company. I will give qualified or adverse opinion because financials are not presenting true and fair. And I will explain why I gave qualified opinion or adverse opinion in basis for qualified opinion section, basis for adverse opinion section in the audit. But I'll clearly explain the reason. I will clearly explain the reason to all the shareholders. Here I'll explain everything, what government is doing, what Air India has done, everything I'll explain here. Now tell me, in this situation, material uncertainty related to going concern, will this side heading, will it appear in audit report? Will it appear in audit report? No, it will not appear in audit report. It will not appear. I told you, material uncertainty related to going concern, under that section, what you will do? You will highlight point given in the notes to accounts. In this case, financial statements do not contain. What you will highlight? Material uncertainty related to going concern para is a highlighter para. When you can highlight something, when the point is there in the notes, you can highlight. When the point is not at all given or not properly given in the notes, can you highlight? You need to qualify. So in basis for opinion, you are clearly giving the reason. No. Once again, will you highlight it? So, sir, material uncertainty related to going concern. A section in audit report. It is a section in audit report. It is one para in audit report. When this will come in audit report? If financial statement discloses this material uncertainty, yes, this will come. If the financial statements do not disclose properly or do not disclose at all, then this para will not come. Don't mug up like this. Very common sense. Very simple point. Financials of Air India honestly admitted they are facing so much of risk. Financials are true and fair. Give unqualified opinion on that going concern matter. But since it is important point, people may wrongly misinterpret my opinion. What I will do? I will highlight that point in my audit report. Can I highlight it under emphasis of matter? No. Dedicated matter, dedicated section, dedicated side heading is given. There you highlight material uncertainty related to going concern. Highlight. Dear shareholder, go to note number 53. Please read the situation. Suppose financial statements not at all disclosing that, or they are not disclosing fully. What you will do? Sir, I will not use this section, sir. I will not highlight it anymore. I will straight away give qualified opinion or adverse opinion and explain the reasons behind that in basis for qualified opinion, basis for adverse opinion section of the report. That's it. An MCQ may be framed whether you're an inter student or final student. This is a standard relevant even at final. Okay. Same content, same discussion, but maybe examples might differ. When little more in depth we will discuss at final. That's it. Now, in a MCQ or a true or false, a question may come. When auditor decided to give a modified opinion on going concern basis of accounting for financial statements, then auditor shall use material uncertainty related to going concern. When auditor decided modified opinion on going concern assumption basis of accounting, auditor shall use material uncertainty related to going concern para. False. It's incorrect. When auditor is giving modified opinion, why he gave modified opinion? He will give reason in basis for modified opinion section. going concern, material uncertainty, that and all won't come into picture. When financial statements are disclosing everything honestly, material uncertainties, everything is discussed honestly, only then that point we will highlight in the audit report. Because we gave unqualified opinion, people should not confuse, so I'm highlighting it. With this, SA 570 is completely done. So with this, the standard has been completely done. Now let's look at the, let's discuss about the material part. Now you may get a doubt. Okay, fine. Let's, while reading the material, I think let's discuss the remaining issues. I think almost the main crux of this standard where students confuse, we have already covered. So let's discuss one by one and sync with our example, whatever we discussed theoretical, almost 50 minutes, 50. We discussed to understand this standard. Now we are discussing actual material. Now, so what is the objective of this standard? The objective of auditor is very simple. Obtain sufficient appropriate evidence regarding appropriateness of, is it right, of what? Management's use of going concern basis of accounting in preparation of financial statements. Whether preparation of financial statements with the management, is it right? And conclude based on the evidence obtained whether a material uncertainty exists. Okay, try to obtain evidence regarding whether going concern basis is appropriate or not. Code matter, I'm doing audit, I'm trying to obtain evidence, and I saw company announced it already, everything, no more sales, nothing. Getting it? And I felt company's use of going concern assumption is not appropriate. I'll report accordingly. Same way, Air India, I saw going concern everything. I felt material uncertainty is there. Accordingly, I will report. That's it. I'll verify going concern, get evidence relating to that. If it is appropriate, I'll report accordingly. If it is inappropriate, I'll report accordingly. If there is a material uncertainty, and I'll report accordingly. Next. Now tell me, first of all, auditor has to check going concern, whether company can continue. Can continue means what? Can continue for how long? 10 years, 5 years, or how many years you will check going concern assumption? The standard says minimum at least 12 months. The standard says at least 12 months. If the management assessment of going concern, by the way, who will use this assumption? Management. When management can use this assumption? Only after they assess. Can they use or not? They need to check. Management has to check, can they use going concern assumption or not? So for that, they need to do some assessment. They need to do some estimation. They need to take some assumption. They need to take some calculations. Whether management assessment of going concern, if it is less than 12 months from balance sheet date on which I'm signing the audit report, I'm signing the date on which I'm certifying. Suppose I'm doing audit of 21-22. So what is the balance sheet date? 31st March 2022. From this date, minimum 12 months management do this going concern. Next to 12 months, can the company properly continue? Can the company happily continue? Auditor has to check. So if management assessment of going concern is less than 12 months, then auditor shall request management to extend it for 12 months. Suppose no. If the assessment period for going concern period by management is, suppose the assessment period under audit for how many months you will check? Same period as adopted by management. Suppose management did going concern assumption for next 36 months. For next 36 months, management did going concern assumption. I will also check for 36 months. If at all company checked for less than 12 months from the balance sheet date, then I will ask them to check at least for 12 months. In some cases, more than 12 months estimation is justified, then you shall make estimation of going concern for that extended period, for that additional period. So this itself can be asked as a 4 marks question. Write about period of assessment of entity's ability to continue as a going concern as per SA 570. The audit period, the auditor shall estimate the assessment period under audit for going concern assumption is same period as used by management. However, if management used it for less than 12 months, auditor shall ask management to increase it to minimum 12 months. In some cases, more than 12 months is justified. In that case, that more number of months, auditor has to request management. Okay, so what management has to do? They need to do assess going concern. What they will assess? What they will assess? They will assess nature and condition of business. They will assess external events and conditions such as changes in law or regulatory. Very recently, BSNL has been given 4G spectrum allotment. Yes, 4G has came into picture in 2016-2017. Till date, BSNL did not get proper allotment for 4G spectrum, and now BSNL is getting 4G spectrum. Actually, 2021-22, BSNL is facing a very tough situation. They have to close the business. But suddenly, external events and conditions, government have changed. They started deciding to support BSNL very strongly. So they want to once again build. Okay. Information pertaining to operational forecast of foreseeable future. So future, foreseeable future, whatever we can see. Foreseeable means what? Whatever we can predict. To whatever the period we can predict. How much extent of future we can predict. Foreseeable future. So do you have information? Check it out. What are the significant events, significant transactions that occurred during the period under review? Auditor has to check all this. So before that, first let me discuss what is this point. This point is nothing but preliminary assessment regarding use of going concern assumption by management. Who are using going concern assumption? Management. Management has to do a preliminary assessment. Management has to do a preliminary assessment. That is called risk assessment related to going concern. Tell me, every company must do preliminary assessment every year. Even Maruti Suzuki, even Reliance Industries Limited, even Adani Enterprises or whatever, even though the business is super successful, every year they must do a preliminary assessment. See, if you find some negative things, then you can do advanced assessment. Basically, preliminary assessment everyone has to do. Correct? So, the following factors shall be considered for preliminary assessment of going concern. For preliminary assessment, management has to consider the following factors. This is not auditor. This is management has to consider. What auditor has to do? What auditor has to do in this case? Whether management did this preliminary assessment or not, auditor has to check. See, preliminary assessment is done by whom? By management. Why they should do this? Because they are preparing financials on going concern basis. So, can the management use going concern basis? For that preliminary assessment, audit management has to perform. So what preliminary assessment by the management consists of? It consists of nature and condition, external events, operational forecast, important big transactions and events happened. What auditor has to do? What auditor has to do is very important. Below I have given a question. First question, additional questions. First question. Auditor has to do risk assessment process. Sir, what is risk assessment process? We'll discuss in risk assessment chapter. We have a chapter, next chapter, audit evidence and documentation. There we will discuss. It is not so easy, ma. We have so much to discuss there. So, when performing risk assessment procedure under SA 315, the auditor shall consider whether events or condition exist that cast significant doubt on entity's ability to continue as a going concern. Explain. Auditor has to consider whether event. So the auditor shall determine whether management has already performed a preliminary assessment. Auditor whether management has already performed a preliminary assessment. What is preliminary assessment? In the above point number B. Correct? If such assessment is performed, auditor shall discuss with the management whether management identified any event, whether management identified any condition which may cast significant doubt on entity ability to continue as a going concern. Preliminary assessment management will perform. What management will cover in the preliminary assessment? They will check nature and condition of the business. They will check external events and conditions. They will check significant transactions happen during the year. They will see operational forecast, all that. They will do preliminary assessment. Accordingly, they'll follow going concern or they may not follow going concern. Now you should check, Mr. Auditor, what you should do? You should ask management whether they did preliminary assessment. If so, look at, is there any event that may cast significant doubt on entity ability? If so, how management is planning to address them? If so, how management is planning to address them? Now let's draw a diagram here. Let's draw a small diagram here. So, auditor has to check. Auditor has to check whether management did preliminary assessment relating to relating to going concern. Whether management did preliminary assessment related to going concern. Okay. So the answer might be, just a minute. The answer might be no, or the answer might be yes. Yes, management did. Very good. Now I will ask management. Did they identify any event or condition relating to going concern? Actually, the sentence is, did they identify any event or condition that may cast a significant doubt on entity's ability to continue as a going concern? Actual sentence is, once again I'm repeating, you write full. Okay. Did management identify any event or condition that may cast significant doubt on entity's ability to continue as a going concern? Again here, the answer might be no doubt, no, everything is fine. Or the answer might be yes. Suppose if management identified any event or condition, now here the auditor shall do further audit procedure. That we will discuss in this standard now. After doing further audit procedure, auditor felt going concern is appropriate, or auditor felt going concern is inappropriate, or auditor might feel going concern is appropriate but material uncertainty exists. The auditor felt going concern is appropriate but material uncertainty exists. Or I will clearly say, let us not give this. Auditor felt going concern is appropriate. Now the next question, is there any material uncertainty? Answer no. Or is there any material uncertainty? Answer is yes. If going concern is appropriate, no material uncertainty, auditors try to give unqualified opinion. That's it. Or if going concern is inappropriate, but management prepare financials using going concern assumption, misleading financial statements, auditor will try to give adverse opinion. Please give reasons in basis for adverse opinion section. Suppose management use of going concern is appropriate, and not only that, material uncertainty exists. In such a case, here I have another two questions. Whether financial statement discloses everything. If the answer is yes, if the financial statements disclosing everything, if the answer is yes, give unqualified opinion, plus highlight this point in material uncertainty related to going concern. Suppose financial statements not disclosing, then auditor will again give qualified opinion or adverse opinion, plus reasons in basis for qualified opinion or basis for adverse opinion. That's it. You see here the diagram. So what is the first question? Auditor shall check whether management did preliminary assessment relating to going concern. Auditor shall check preliminary assessment related to going concern. If the answer is yes, did they identify any event or condition that may cast a significant doubt on entity's ability to continue as a going concern? If the answer is yes, do further audit procedure and finally decide, is everything fine, appropriate? Answer, material uncertainty, is it there? No, unqualified opinion. If material uncertainty is there, are financials disclosing? Yes, unqualified, highlight that. If material uncertainty, financial statements are not disclosing, give qualified basis for adverse. Material uncertainty related to going concern will not come here. Next, suppose if going concern is inappropriate, after I conduct further audit, I decided company cannot continue. No. But management uses going concern basis, give adverse opinion. Financials are not showing true and further misleading. Sir, what if they don't identify any event or condition? Happy. Going concern is appropriate, same treatment will apply. Sir, management first of all did not do any preliminary assessment, sir. Management is not at all being, they don't even know anything. They just blindly prepare balance sheet P&L. They didn't do, ask them to do. If still they didn't do preliminary assessment related to going concern, give modified opinion. It may be qualified or adverse depending upon the situation. Because without verifying going concern, how can you prepare financials using going concern? Without verifying it, how can you prepare financials using going concern? So, auditor has to check. Auditor shall determine whether whether management already performed preliminary assessment, and if such an assessment is performed, discuss with the management whether they identified any event which may cast significant doubt on ability to continue as going concern. If so, how management is addressing. I found in Air India material uncertainty, some event is there, some condition is there, business condition is very poor, accumulated losses. I discussed what is the management plan. I asked, hey, government of India is supporting. Their reply, if such assessment is not performed, discuss with management how they used going concern basis. They didn't perform any assessment, still they used going concern. What is the logic? Without checking going concern, how did you prepare using going concern? Ask them. So that's it. The auditor shall remain alert throughout the audit for getting evidence about event or condition. Throughout the audit, you need to be continuously alert. If you find some situation that will affect going concern, immediately discuss with management. SCA 315 requires auditor to revise risk assessment and modify further procedure accordingly when additional evidence is obtained during the course that affects entities. This itself can be asked as a true or false question. How this question can be framed, Look at this highlighted word blue. Now I will read, slightly modify when blue letters comes. SCA 315 required auditor to revise risk assessment, and no need to modify further audit procedure when additional evidence is found. Additional evidence is found relating to auditor's assessment of risk. False. When auditor get additional information, auditor has to modify his risk assessment and modify the further audit procedure. What is further audit procedure? What is compliance procedure? What is risk assessment? I'll discuss all in the next chapter. Okay. Next. So if you again come back to the B point, period covered. Suppose if at all management is not doing assessment at all, you asked them to do, they didn't do. Straight away you give modified opinion. No need to again check all this. Sir, in recent exam in January 2021 for 4 marks there is a question. Management assessment of entity's ability to going concern involves making a judgment about uncertain future outcomes of events or conditions. What are the factors to that judgment? This question understanding itself is very difficult. What is this question? When management is making going concern assumption, just a minute. Yes. So what is this question? Going concern assumption involves some assumptions, right? Whether company can continue in a future or not. Yes or no? It depends upon some future. It depends upon some uncertain future outcome. This is inherent. Going concern, there is an inherent limitation because going concern assumption is not based on past data. It is based on future. How can I predict future? What factors, I will cover. So what are the factors related to my going concern assumption? What factors I will look into? This is a point which management consider. Okay. So this question, management assessment of entity's ability involves making a judgment, some judgment at a particular point in time. See, management is taking as on 31st March, they are preparing balance sheet. As on that date, they will estimate. As on that date, can we use going concern assumption or not? Next 12 months minimum, they need to check. So on a particular point, as on 31st March, management is making this assumption, correct? Maybe whatever assumption I am taking today, based on circumstances prevailing today. See, as on 31st March, next 12 months, what gonna happen? I have some data. Tell me, after 2 months, some unexpected thing might happen, correct? Some unexpected thing might happen, which I don't know as on previous 31st March. Possibility there or not? So, management assessment of entity's ability to continue as a going concern involves making judgment, assumption at a particular time about future outcomes of some events or conditions. So the following factors are relevant. So when management is taking a judgment on going concern, the following factors. What is the degree of uncertainty associated with outcome of an event or condition that increases significantly the further into the future, of that event or condition or the outcome occurs. For that reason, most financial reporting framework requires an explicit management to specify period for which management is required to take account all levels of information. So complicated about it. CA Inter, why they're testing this? At CA Inter they're testing this. At least if it is CA final, to some extent acceptable. See, when degree of uncertainty, there is a word here. Oh my god. For this, you need to understand SA 540, which is discussed only at CA final, not at CA Inter. You don't have in CA Inter SA 540. Accounting estimates, audit of accounting estimates, including fair value accounting estimates. So difficult standard. See, like next 12 months, my business is going to do well because of so many reasons. I have so many reasons. Maruti Suzuki, if you go and ask, what is your position in the next 12 months? They say, excellent. So you ask, what are the reasons? They showed some reasons. Will they completely happen 100% as it is? May or may not. Which means there is uncertainty, correct? There is some uncertainty for the future information which I'm predicting today. There is some uncertainty. How much uncertainty? Example, sir, next May 2023 exams will have on time or not? 99% on time it will conduct it. 1% there is a chance, we don't know. Now here uncertainty is degree. Uncertainty degree is how much? Only 1%. In this case, no problem. So Maruti Suzuki is saying next 12 months company will perform very well. But some uncertainty is there, no? 1 or 2%. If the uncertainty is very low, no problem. If uncertainty is very high, if the uncertainty is very high, it is a questionable. Now Honda Motors, no, Honda, 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 City Honda, you know that company. Their sales are drastically decreasing. Next 12 months, the company is saying we will perform good, but the uncertainty is very high. In spite of prevailing competition, new entrants, new models, Honda is not upgrading their cars properly. So there is high amount of uncertainty. If the degree of uncertainty relating to going concern assumption is very high, the risk is very high. So what is the degree of uncertainty? Relating to an outcome of some event or condition which increases significantly in the future. Getting it? Of an event or condition or the outcome that might occur. For that, most financial reporting frameworks require an explicit assessment, specify the period for which management is required to take. That's why you see in our standard or in our accounting standards also explicitly our Indian financial reporting framework, okay, Indian framework, they explicitly tell minimum 12 months they need to do going concern assumption properly. What is the size of the organization, complexity of the organization, what is the nature and condition of the business, what is the degree, how external factors are affecting. This is what we have seen in the B point, preliminary assessment. What is judgment about future based on information available at the time at which the judgment is made. I am making as on 31st March about the future. Okay, so what is the information available right now? Subsequent event may result in outcomes that are inconsistent with as on today. I have some information based on that I felt everything is good, but subsequently some event arisen. So whatever decision I took today, tomorrow it may go wrong. All these factors you should take into account when you are making assessment about going concern. Dear company director, you are a director of a company. When you are making going concern assessment about the future, look at your financial reporting framework. For how many months it is asking you, check that. Look at the nature and condition of business. Look at external events and factors. Okay, and see whatever decision you are taking now, it is based on today data. Subsequently, some other new data may come into picture which will invalidate, which will make your past decision wrong. Consider all these factors and take judgment carefully about the going concern. Very, very important for every stakeholder about your company. Next. Sir, yes, management did some preliminary assessment. I verified it. I am the auditor, sir. The auditor identified circumstances that cast significant doubt on entities going concern. Company going concernability, no sir. I found some situation, sir. I found some factor. I found some circumstance. I found some condition. I found some event. So I found some events or circumstances or condition that affect going concern. Sir, what do you mean by event or condition that affect going concern? I have seen some indicators, sir. I saw some indicators. Net liability indicator. The company position is not net asset, it is net liability. Air India. Company borrowings, they're approaching maturity, but company is unable to repay or renew. No cash flows are to repay, but borrowing tomorrow I need to pay, but I don't have bank balance. Withdrawal of financial support. All the creditors are not giving credit. Negative operating cash flows. Ratios are adverse. Operating losses. Deterioration in value of assets were completely destroyed. Company is unable to pay dividend. Company is unable to pay creditors on time. I am unable to comply with loan agreements. I am unable to pay loans on time. Credit to cash on delivery. All suppliers are no more giving credit. Only if I pay cash, they are delivering. That's inability to obtain financial. See, these all are examples. In examination, they may ask you. See, the following are examples of event, condition, which may cast a significant doubt on ability to continue as a going concern. What are the events or conditions? These events and conditions are classified into mainly two types: financial related, operating related. Now we have seen financial related. By looking at the balance sheet P&L, by looking at the cash flow, you can figure out, hey, something is wrong with the company. Something company is about to default, you can figure out. Operating indicators are there. Management intention to liquidate. Ford Motor itself openly announced we want to liquidate. Loss of key management without replacement. In Coffee Day, when the CEO died, the CEO suicide, no? So when the CEO died, Coffee Day entire future was blank. Later somehow it was revived. Okay. Loss of major market. For BSNL, 4G market is no more. Now BSNL is getting 4G market, so they're again opening up. Labor difficulties, shortage of supplies. Entire worldwide semiconductor technology. 25% of the world semiconductor technology is controlled by Taiwan. And now with the Taiwan, every country is fighting. China is fighting against Taiwan to occupy that. Getting it? So because the semiconductor supply is very short, many cars are in waiting period. You know, there is a car called Mahindra XUV 700. The waiting period is 2 to 4 years. Car, more than 1 year waiting period. Almost all Hyundai cars waiting period is more than 6 months. Almost every car company has a waiting period of more than 2 months or 3 months or 4 months or 5 months. Why? Supply is not able to meet the demand. Why supply demand? Manufacturing facility problem. Manufacturing capacity is so much. The problem is raw material supply. Emergence of a highly successful competitor. Suddenly a big competitor came into the market. These all indicators, these all situations, will trouble this company, will end the life of this company. Other indicators, there might be some other indicators. Non-compliance with some capital norms, non-compliance with regulatory requirements, solvency liquidity ratio. Banks, they have some other legal requirements. If they don't comply, their license will be cancelled. Pending legal regulatory proceedings against the entity, if successful, result in claims that the entity cannot pay, cannot satisfy. There is a case against the company. If at all that case was successful, the company has to pay lots of amount, which company cannot. Changes in law or regulation, that will adversely affect the company. Uninsured or underinsured some catastrophe occurred, some natural calamity occurred, and all my plant and machinery destroyed, and I don't have insurance properly. These are all events. If auditor identified any of these events or conditions, what auditor has to do? The auditor has to simply analyze cash flow, profit, other factors, look at latest financials, take legal counsel, inquire entities legal counsel regarding any litigations, read the minutes of the meetings, do check subsequent events, see whether company has proper borrowing facilities or not, see what is the management plan relating to future actions, because these events are there. What is the management future plan? And also check whether company has a proper risk assessment method, whether company has a preliminary assessment methodology. If it is there, okay, fine, happy. Ask the management what they found. Look at the cash flow forecast, getting it, and get a representation regarding their plans for future actions and feasibility. Management is saying, we do that, we do this, we do that, and we'll resolve the situation. Okay, give a written declaration that you are honestly doing all that. I'll take a written declaration. Why written representation we take? At many places in audit, we will come across this word, get written representation. Why this representation is required? It's a proof for me. Tomorrow, if shareholder comes and question the audit, hey auditor, what are you doing? You're doing nothing. You're not even involving with the manager. You're not talking to the management. You are negligent. Financials are misleading and you didn't highlight that. I will immediately show representation. See, I have done so many things by sitting with the management. Management signed and gave me. This is a proof that I spoke to the management on every aspect. Written representation is evident sometimes. I'll discuss about written representation. We have a standard SCA 580. There we will discuss. By the way, this is CA interclass, not final class. At final, the discussion will be little more higher. But actually, the duration is shorter. In final, no, we need not give this much detailed explanation. Only at CA Inter, this much detailed explanation is required. So finally, yes sir, finally, sir, going concern assumption is inappropriate. I saw everything, sir. Management did preliminary assessment, I saw their findings, and I found some event, I did further audit procedure, and finally felt going concern is inappropriate. Still the financials, no sir, they prepared using going concern, even though it is not correct. Auditor shall express adverse opinion. Sir, going concern is appropriate, sir. But material uncertainty exists. Now my question is, okay, it is fine, but uncertainty is there. Okay, are financial statements disclosing that fact? Do not adequately disclose the financials. No sir, they're not properly disclosing. They're either not disclosing or not properly disclosing. If auditor concludes financial statements are not adequately reflecting material uncertainty related to going concern, then shall express a qualified or adverse opinion and explain the reasons in basis for qualified or adverse opinion paragraph or section. Sir, financials, no, they're honestly disclosing. Air India note number 53, which talks about clearly about material uncertainty. The auditor will express unqualified opinion in this regard as entity adequately disclosed. But important point, no, in the financials, everybody should read. Highlighted under emphasis of matter. No. Standard says the audit report shall include a separate section with the heading material uncertainty related to going concern and draw the attention of the readers to the specific note point presented or disclosed, adequately by the management about the uncertainty. Highlight it. So if the auditor concludes financial statements adequately disclose material uncertainty which may cast a significant doubt on entity's ability to continue as a going concern and management plans to deal with these events, material uncertainty related to going concern is presented and what is management plan of action, everything is honestly disclosed. So this is first you need to read, this is second point that you need to read, this is the last point. So in this order only you read next time onwards. So the auditor will express, also you strike off, the auditor shall express unqualified opinion and audit report shall draw the attention to the readers. With this, entire standard has been completed. Almost 1 hour 25 minutes, almost close to 1.5 hours we discussed. So with this, what? One more section of the audit report we have completed. So with this, material uncertainty related to going concern is completed. So what else left? E-audit matter. If at all we discuss this, major audit report chapter is completed. Many students of my final, they think that CA final only we are taking that level. No, at CA Inter itself that level is required because CA Inter papers are honestly speaking tougher than final audit. So we need to discuss it in depth. So in this chapter audit report, it is closely related. At CA final, if at all we say 70, at CA final it is 100. That's the only difference. At CA final we'll discuss at 100% level. At CA Inter we'll discuss at 70% level. But whoever attend my class audit, CA Inter, they think it is beyond anybody else. That I can assure. You are getting the best in audit. That I can assure you. You can just cross verify the standard with any other lecture. Not only this, any other standard of my class, any class of whatever topic I take, you just compare the topic with any other lecture available in the market. I bet you will not find that much clarity like what you get from me. So the next standard is key audit matter. Come to that.